News 1110 99.3 WBT, the Income Strategy Show with Dolph Janis, clearincomeforlife.com. A lot of talk in Congress about forcing wealthy Americans to pay more in taxes. The latest example of that is a bill that would impose a new tax on all stock trades. But Liz Ann Saunders, chief investment strategist for Charles Schwab, tells Fox Business these things usually end up costing all of us more.
The ultra wealthy are, at least on paper, really easy targets. The problem is it is a slippery slope down into the middle class, particularly when you're talking about individual retirement accounts and 401ks. That is the slippery slope problem, and the difficulty of truly trying to hone in on a particular wealth class and not having taxation end up hurting those closer to the middle class. That is the perpetual rub with these things.
So should all of us middle-class folks be concerned about these new tax proposals?
Absolutely. I mean, I've been doing this workshop on the new tax laws the last couple of weeks. I'm here at the office for clients. We have a tax map program, and it's been helping a lot of clients and potential prospects, helping them realize it's not taking the money out, it's where you're taking your money out of that can help you with the tax. And I read this article that you just talked about a couple times, and I love to read the whole article to folks, but I mean, just at least call, email, or whatever. It's fascinating. I just want to read this one start of it. It's hard to imagine Congress wanting to tax Americans who are saving in company retirement plans. But that's what the Democrats' new taxation tax appears to do. It's called the Wall Street Tax Act. The new legislation would tax every stocks, bonds, and transaction at 0.1%, or basically $1 per 1,000 in trade. It goes on to talking about the basis points they want to charge. And I'm like, aren't they already advisors out there charging enough in fees, and then they have the overrides and the transition costs and stuff? So if you have these things, they're taking away your write-offs in so many different areas. This is just more money you're putting at risk and more money you could potentially lose. Now, if you're looking at $1 per 1,000, multiply that by 100 or 200 or how much money you have, and it just adds up. And I have this client that came in this week, Pat and Susan, sisters forever. They're in their high 60s. Two of the most pleasant Southern girls I've ever talked to in my life. I sat with these girls. They came in around 3 o'clock, and we sat until just 6 o'clock at night talking and coming up with a plan. This is our third meeting, and Susan showed me this statement. And I looked at this statement, my eyes dropped, and then Amanda, who's a licensed agent with me, sits in the meetings, and she just started laughing. I said, this is just an account that she found that she had. It had $650 in it. It wasn't much. But she looked at the performance for last year, and it's been with this advisor she said, now it's been over 10 years. It started with 1,000. It's earning 0.1%. So she earned 56 cents in interest last year on this account. But her account went down $39.48.
Okay, wow.
And it's like, wait a second. Because there was a $40 charge for managing the account on this prospect. So she didn't even realize she had this, and we were telling her, hey, we're going to do with it. But so just imagine you have money in an account. It's earning a fixed interest. You think it's safe. And then, boom, that fee pops out at you, $40. And so now her account value actually went down almost $40 because she didn't earn but 56 cents in interest. Now, think of yourself in the same way. Let's say you have an account earning the same person, and it's $65,000 that's sitting in this safe Roth account of yours that you've been saving up for. Well, now you've earned $56 in interest. Congratulations. Boom, here comes that $40 fee. It might even be more. So you've made $16 in a full year.
That's not worth it.
No. And when Susan looked at this, and she was like, I never even paid attention to that. So then we started looking at other things, and it's these little $40 here, there's $80 here, there's 1% fees. All this stuff is adding up. And when I talk to clients, and I talked, especially with Susan Patterson, how long did it take you to make $40? And she's like, well, it's about 2 hours of work. That's okay. So you lost 2 hours of work for nothing. And then you take all the other fees that were attached, and then if you lost money in the market or whatever it might be, how much did you just work for free? And the light bulb went off, and boom. But you have to pay attention. That's why when you do these reviews, I'm not a securities licensed individual. I have security licensed agents around me that I show some of this stuff to, and they share me their thoughts. But there's fees out there, folks, and if the government's going to put this Wall Street Tax Act on you, it's just giving more money away for you not to be able to save in retirement.
Yeah, it's creating another obstacle for you. So whether it's taxes, whether it's fees, there are so many roadblocks in retirement, but it doesn't have to be that way. You just need to be in the know and aware of what's happening with your retirement. That's why Dolph makes things available like that Clear Retirement Organizer. He does that retirement tax mapping software he mentioned. He's got that 5-step to retirement budget guide, risk guide, so many resources available to you at no charge. And he does events throughout the year involving dinner quite often, of where you can get more informed about all of the options that are out there that affect your income in retirement. Those things and Dolph's time, if you'd like to come in and talk about him putting together a custom retirement income plan, are complimentary. 704-919-0149. That's 704-919-0149.